and welcome to the Suzlon Energy Limited Q1FY26 earnings conference call. During this call, the company management may make certain statements that reflect their outlook for the future, which could be construed as forward-looking statements. These statements are based on management's current expectations and are associated with uncertainties and risks. As detailed in the annual report, actual results may differ, so these statements could be reviewed in conjunction with the risk the company faces. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on a touch-tone phone. Please note that this call is being recorded. We will begin with opening remarks followed by a Q&A session. To be fair to others, we kindly request each participant to ask no more than 2 or 3 questions. From the management, we have with us Mr. J.P. Chalasani, Group CEO, and Mr. Himanshu Mody, Group CFO. Thank you, and over to Mr. J.P. Chalasani, sir.
Thank you. Good evening, everyone, and thank you for joining us for Suzlon Q1FY26 earnings conference call, especially considering that these are crowded days for results. This year is a momentous one for us as we celebrate 30 years of Suzlon. For the past 3 decades, we have consistently demonstrated resilience, innovation, and future-focused mindset that continues to shape our journey. Talking about the industry, the recent amendment to the wind ALMM procedure by MNRE marks significant policy shift, one that is expected to realign industry dynamics by providing a level playing field to all participants and strengthen supply chain resilience. Suzlon is fully compliant and strategically aligned with the policy framework. On the commissioning front, the industry over 2 GW is already commissioned in the first 4 months of FY26, signaling a positive shift in the execution pace. We expect the industry to do close to 6 GW of wind installations in FY26. Coming to business highlights, we are delighted to report yet another record-breaking quarter, with Suzlon setting a new benchmark in execution by delivering an unprecedented 444 MW in Q1 FY26, which is the highest ever first quarter in the last 30 years. Our order books are past 5.7 GW, marking 10 consecutive quarters of growth and reaffirming our leadership across PSU and C&I segments and utility segments. Order book for the 144 model, S144 model now exceeds 5 GW, a testament to superior technology and strong customer confidence. We take pride in stating that S144 has the lowest carbon footprint across all the OEMs globally and complies with the latest MNRE regulations. On the manufacturing front, our capacity of 4.5 GW is fully operational and up to meet the order book. At Suzlon, we commissioned 117 MW in Q1 with an additional 547 MW of erected WTG currently in the pre-commissioning stage, bringing the total to over 664 MW. With less than 25% of our order book comprising non-EPC projects, where land acquisition lies outside our scope, client-side delays have impacted commissioning timelines. To address this, we have prioritized the projects with partial land availability upfront. Looking ahead, projects which come with substantial land readiness are progressing well and offer greater commissioning visibility for FY26. Additionally, Suzlon is actively pursuing a long-term strategy to mitigate land-related delays by developing an active project pipeline. Our OMS business continues to do well with more than 15 GW of capacity in India, with machine availability ensured above 95%. Renom continues its strides for customer fleet acquisition, with AUM crossing 3 GW. Our forging and foundry business started showing upticks in the last 3 quarters, and we expect to continue this trend in FY26. Our top priority remains the timely execution of our robust order book while maintaining the highest standards of quality and ESG. We remain committed to achieving our FY26 guidance of 60% year-on-year growth across all key performance parameters. I would now like to invite Himanshu to take you through our financial performance.
Thank you, JP sir, and good evening, ladies and gentlemen. As always, for this discussion, I shall be referring to slide numbers 19 to 26 of our investor presentation, which has now been uploaded on our website. Taking you through the Q1FY26 numbers, in Q1FY26, Suzlon continued its exponential growth trajectory, delivering 444 megawatts in revenue recognition, which is recording 62% growth on a year-on-year basis, with all financial parameters showing a strong uptrend. Suzlon reported consolidated revenue of 3,117 crores in Q1 FY26, with EBITDA reaching 599 crores, a robust 62% year-on-year growth. The EBITDA margin improved by 86 basis points to 19.2%, up from 18.4% in the same quarter last year. We achieved the PBT of 459 crores, posting a year-on-year growth of 52% over Q1 FY25. We are pleased to report on our balance sheet as of June 25 reflects a position of exceptional strength with a consolidated net worth of 6,542 crores, and our net cash position stands at 1,620 crores, further enhancing our financial flexibility and resilience. Adequate banking limits have been tied up of approximately 7,000 crores for execution of current order book towards working capital requirement. I would also like to reiterate that our end-to-end wind energy model, supported by a fully integrated supply chain, proven execution capability, and best-in-class service, delivers a competitive edge that is both distinct and difficult to replicate. With this, I would now like to hand over the call back to JPC Chalsani, sir.
Thank you, Himanshu. Before we start discussing the results with all of you, I thought it's good for us to upfront brief you on the issue of the development today. As you all know, that which we reported publicly, Himanshu has decided to step down, and he would be quitting as a CFO as on 31st of August this year. Himanshu joined us 4 years back. I still remember that point of time I was advising Mr. Tulsi Tanti on key managerial person hiring. We had at least 2 or 3 calls at that point of time, for him to take this plunge and come to Suzlon, the stage where we are in. And it was good that I was able to convince him. He came on board, and he had, all of you know that he had a phenomenal performance for the last 4 years. The results are shown. With all that performance as a CFO, obviously the next question is the growth. In a company in the financial position that he can't be beyond the group CFO. Therefore, a few months back, we started discussion and said that Himanshu should move to business for his growth purpose. And in fact, at that point of time, we started search for the successor for CFO a couple of months back, and we have been discussing various growth opportunities for him within the business, in the company. Obviously, while we went through a number of discussions, pros, cons, and also he had an opportunity in the financial sector. I know that it's they having spent hours and hours together as friends, as mentors, as a group CEO versus group CFO. We went through various pros and cons of continuing here in the business role versus financial sector. At the end of it, of all that debate, he finally decided that at this juncture, the age where he's in, and ambition what he has, and the definitive interest what he has, so he decided to take up the financial sector job. So that was a hard decision for him, but having known that what he went through in taking the decision, we all said we respect the decision and we will support him fully. As he mentioned in his letter, obviously he is available to us at any point of time we need to draw upon. And I clearly told him that I take that blank check completely to encash. And if I would personally, and as a company, we would keep dragging him into all critical issues for support moving ahead. This has been, I know personally, it has been a tough call for Himanshu to decide, because his heart remains Suzlon, but the mind always says that what to do next. So I think that's the reason he took this call, and we fully support, and we wish him the best of luck. Of course, he is available to us till 31st of August, and thereafter, as per the blank check is fully available. So I thought I should let you know, and also wanted to say that because we were moving into business, we started a search for the group CFO sometime back, and we are in the advanced stage of appointing the successor to Himanshu. So I thought it's better, we owe you this explanation upfront rather than somebody asking us. So Himanshu, you want to add anything?
Yeah, thanks a lot, JP sir. It's, no words can do justice to my 4 years that I've had here. So it's been a privilege to serve as the group CFO at Suzlon over the last 4 years. When I look back at this journey, it's been nothing short of mesmerizing, one that will always remain close to my heart and will cherish. From navigating the challenges of a debt-laden organization to now witnessing Suzlon as a cash surplus resilient enterprise, I feel a deep sense of fulfillment. The dream of reviving Suzlon was an ambitious journey that we embarked upon, and today I can proudly say that the ship has not only weathered the storm, but is now firmly anchored. With the organization now on a strong footing, I believe this is the right time to explore new professional horizons for me personally, as explained, outlined by you. And, I echo the thoughts that it was a very, very tough decision and a well thought through one, after which I have decided to look for opportunities outside Suzlon. And whilst I will be there till 31st August this year, but as I've also put in my resignation letter and as echoed by JP sir, I will be available at the end of a phone, should the company, the management or the board or the Tanti family need me at any point in time. With this, I want to express my heartfelt gratitude to Suzlon family, my colleagues, the leadership team, every individual, all of you who are on this call. Several of you have interacted on several occasions, one-on-one, and I'm sure I will continue to do so in one shape or form. So I really want to thank all of you, investors and analyst community, for the support that you've shown in us as the management during the Suzlon's transformation journey. With that, I'd like to conclude my presentation, and we can open the floor to discuss any performance-related, Q1-related questions that the callers may have. Thank you, sir.
Thank you very much.
Yeah, go ahead, open it for the Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question comes from the line of Sumit Kishore from Axis Capital. Please go ahead.
Good evening. Thanks for the opportunity. My first question is in relation to the Q1 P&L. The Q1 interest cost seems to be up quarter on quarter, even though the company is net cash. Is there any specific reason? And also, if you could comment on the tax rate. We started with about 29% tax rate in Q1. What is a sustainable tax rate we should be working with going forward on an annual basis?
So, hi Sumit. So far as the interest cost is concerned, there are certain one-time processing fees which we've paid out to institutions for working capital optimization that you will see in place over the next few quarters. So as you know, a large part of our working capital is or has been dependent on letter of comforts issued by REC, based on which we take exposure from the bank. So it's a double ongoing commission that we're paying. Now, with our improved results and with an improved FY25 performance, there are quite a few banks where we have tied up direct working capital limits now. As a result, there is one-time processing fees that we've paid during the quarter to these institutions. But as we move along in the journey, quarter-on-quarter basis, this will only help us optimize our bank guarantee and LC charges. So whilst you see the interest cost at about 70 crores this quarter, but directionally we maintain that close to about 200 crores per annum should be the net interest cost going forward for the year. So far as the tax rate is concerned, you should stabilize at about 25%. through the year. As you know, for this year, it will just be a P&L charge, which is a charge off of the DTA that was created in FY25. There is no cash outlay on account of tax. Depending on how this year pans out, we may have cash outlay going forward, but you should be working with about 25%.
Okay. And so what was the one-off impact in interest for the quarter?
Sumit, don't have the numbers handy, but as I said, directionally assume about 200 crores of net interest cost for the year.
Okay. The second question, is in relation to the phase out of WTG deliveries for the fiscal. So you've done about 44 megawatts in Q1. I mean, typically you had a 40-60 H1, H2 mix on a full fiscal basis. Is this year going to be somewhat different, if at all?
We expect Sumit to be same, and then we also, as I said in my opening comments, we expect that 60% growth compared to last year to be there.
Yes. But the phase out will be similar to earlier years.
Yeah.
Okay. And finally, after ALMM, what are the early indications for the upcoming tenders or upcoming bids or orders in terms of competition, especially from the Chinese players?
See, as I said, Sumit, what the ALMM does, of course, there are three components, R&D and cybersecurity, which we will not talk right now. On the supply sourcing, if you look at it, what it does is creates a level playing field. Because everybody has to source from list of wind turbine components listed in the ALM wind components, which anybody wants to list there. There's an inspection process, quality checks before it gets listed. So I think whatever the disadvantage we had till now with respect to the Chinese other one, it goes away. So all of us are on the same level playing field. So even with the disadvantage, we had the significant amount of order book. And moving ahead, I feel it's good for us, the element what is coming, and we are fully compliant. And all three aspects, whether it is sourcing or it is R&D or it is the cybersecurity.
Thank you so much. Those are my questions, and wish Himanshu all the best. Thank you.
Thanks, Sumit. And to answer your question, out of the 70 crores, 14 crores is the one-time processing fees for this quarter.
Thank you.
Thank you.
Thank you. The next question comes from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yeah, good evening, sir, and thanks for the opportunity. My first question is order inflow. How is the order inflow opportunity looking like, given some concerns on the slowing down of signing up of power purchase agreements and concerns related to land acquisition?
Mohit, first of all, I think henceforth I'm not going to ask my people for business plan. I will look at your analyst report. You seem to be dot on and everything. Okay.
Thank you.
So anyway, that's consistent to you. But on the order book wise, if you look at the breakup, Mohit, for us is that the 54% of our order book is C&I, not connected with bidding, and about 21% is PSU, and 25% is coming to the bid.
Sir, please go ahead with your question. Hello. As there is no response from the participant, we'll move to the next participant. The next question comes from the line of Amit from Morgan Stanley. Please go ahead. Mr. Amit, please go ahead with your question.
Continued increase in your other expense and employee costs, where we were expecting that we will have some operational leverage once the volumes pick up. So can you throw some light on it? Because on contribution margin level, things are good, but O&M and employee cost increases, and on the other hand, your O&M business margins are declining. So is there some linkage that we can derive over here on cost controls?
So, Amit, before I answer your question, firstly, just want to make sure, are we audible?
Yes, sir, I can hear you.
Yes, sir, you're audible.
Yeah, so Mohit, we apologize. I think, something got interrupted and JPC sir was answering Mohit's question earlier, but we'll come back to Mohit's question. Amit, we'll answer your question now since you're in the queue. So, from a manpower cost perspective, as we've maintained that, of course, OMS will continue to deliver close to 40% EBITDA margin. That has always been our guidance, and we are very close to that. So, quarter to quarter, it may differ based on certain one-time income or one-time charges. So, the range may vary from a tight range of 39 to 41%, depending on quarter to quarter. But going forward, on the overall break-even analysis for the WTG division, as we maintain that about 700 to 750 megawatts, so long as we do, we would be break-even at the EBITDA level, and we will ensure that the manpower costs or other operational costs are kept under control with that. Another feature that we've started adding from Q1 this year is that the annual PLI provisioning, which historically was done to the extent of 80% because, company was always falling short of its targets or, for obvious reasons we know of. But now we've started provisioning the PLI to the extent of 100%, which means that, we are, of course, confident of meeting our own internal budgets and targets, which are in line with the guidance that we've offered to the street.
Sir, the line for the participant has been disconnected. So we'll move to the next participant. The next question comes from the line of Suchrit D. Patil from Eyesight Fintrade Private Limited. Please go ahead.
Hi, this is Suchrit Patil here. My question is to Mr. JP. As Suzlon grows in the wind energy and maybe looks at new markets or tech, how are you planning to keep the growth steady if demand slows or there are some policy changes? And if some plans, say, don't work out, do you have a backup to protect the margins and keep moving ahead? Yes, sir.
Yeah, obviously, if you see that today our the order book is 5.7 gigawatts as on today as we speak, and then there are many more orders which are under the discussion. So there are sufficient order book for this year, next year. And the other one, as I mentioned sometime back, our order book is predominantly for C&A segment and the PSU segment, which is not going to stall. Okay? Because the C&A segment needs this switch over to renewable energy for the tariff arbitrage as well as for the green energy coming into their for their products. And PSU would continue to be there. If at all we can speak about is that will there the PPA sign and the bidding route can be slightly slowed down, but I don't see that overall impact to that extent. We are very much on target to reach that if not 100, as we always mentioned that we will definitely touch 85-90 gigawatts by 2030. We will reach there. Even today, as we speak, about 17 gigawatts of wind is under construction, and we already crossed about 53 gigawatts or so. And I really don't see that as an issue. And as we mentioned sometime back, that to ensure that anybody backing out, we are always consciously overbooking compared to what we can supply in a quarter or in a year.
Thanks. Just curious, in case the competition picks up, so are you thinking of going into JVs or into partnership with any firm? And if possible, can you discuss with whom would you be partnering up in the future?
We don't need to partner with anybody in India. We are the leading wind manufacturer, and the competition has been there. Competition will be there. Only the competition would keep changing. At one point of time, we're competing with European players, and today we're competing with Chinese players. Competition would always be there, and we always remain in the market. We bring our models because we have an in-house R&D. We bring our models which are more competitive. And then today, even after the ALMM has come, new ALMM regulations have come in, which I mentioned some time back, also removes our disadvantage, and we are on the same level playing field with everybody. So therefore, that competition of cheaper imports is not there anymore. Okay, moving ahead. So therefore, I don't. It's not out of sense of arrogance, but I think logically, if you see, that won't be an issue. But having said that, we always need to keep working towards the reduction of cost per kilowatt hour of our turbines, which would happen from the point of view of reducing the cost of procurement, COGS, as well as improving the efficiency of each of the turbines. And as in the next few months, you will see that newer and newer versions coming in terms of the same platform with improved efficiencies for our turbines.
Okay, great. Thank you very much for your guidance.
Thank you.
Thank you. The next question comes from the line of Siddhartha, an individual investor. Please go ahead.
Hello. Sir, am I audible?
Yeah, you are. Please go ahead.
Yeah, congrats on a great set of numbers, sir. Two questions I wanted to ask. One on the new product development journey that you just talked about. Could you please throw some light on what kind of product development journey we have? I understand the S144 is one of the highest performing products in the market today, but are you looking to launch products beyond the 3.15 megawatt, say somewhere around 4 megawatt turbines?
Let me not put a number to it, but as you know that we are the only Indian OEM who has in-house R&D. We keep developing models from time to time. So what we do is that because we studied, I mentioned this in earlier calls as well, because we study the wind data across the country from time to time. Every year we keep studying wind sites. We know what type of a wind sites will come in 2 years, 3 years down the line, and what type of a turbine model is required there, so that cost per kilowatt hour doesn't go up. So once one model is out, even before that is out, next model is always on the design for us. So I can assure you that the next set of models would come in time. And also let's understand the fact that the megawatt size doesn't make any sense in India, especially. What is important is what comes as cost per kilowatt hour. Okay? So in fact, the Director General of NEWA was on record in the open meeting with the chairman, with the minister, saying that India is best suited for anywhere between 3 to 4 megawatt because of our low wind speeds, and we are not suitable for high listing. And second thing is also logistics is an issue. So therefore, it takes some time before large turbines can be transported to the site. But to answer your question, yes, we will bring out the next model as and when we think it's necessary.
Sure. Thank you, sir. And the second question on the industry dynamics, as you rightly pointed out, the LCOE is the North Star metric that a customer basically looks at. With battery prices decreasing further, now we see that there is some indication that prices may go up. But are you seeing that a solar plus BESS sort of a system would displace wind, except for the FDRE projects?
Yeah, we discussed earlier. Wind tariff is, let's say, anywhere between 3.6 to 3.9, depending upon which state, what it is. Okay, and the most of it comes during the peak hours, evening peak hours. If you're putting solar plus the battery, solar tariff is, let's say, 2.5, 2.6 today with ALMM requirements. So if I take out the 2. Unless the battery cost is less than 1.2 per kilowatt hour, the solar plus battery can never ever replace wind. Therefore, what would actually happen is nothing to do one replacing the other. The different combinations of solar plus storage, wind plus storage, solar plus wind plus storage would come in depending upon the load profile of different states or different requirements. I don't think one is going to replace the other one. It won't happen. And also from the grid stability point of view, it can't happen.
So, thank you so much, sir.
Thank you. The next question comes from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yeah, hi, sir. I'll repeat my question, sir.
Yeah, Mohit. Because we went through other questions, we forgot your question.
So I got dropped, sir. Yeah, no issue, sir. My question was, how is the order inflow opportunity looking like, given concerns on slowing down of power purchase agreements and the concerns related to land acquisitions? That was the question, sir.
We at least if you look at the last 10 quarters, 9 to 10 consecutive quarters, Mohit, that our closing order book has been higher than the opening order book, in spite of the fact that the deliveries each quarter has been increasing. Okay, so therefore order inflow has been very steady for the last 9 quarters. This itself shows sustainable growth. So that's not an issue. Having said that, looking at the order pipeline, what currently we're discussing, one is we have a 5.7 gigawatts, and second thing, looking at the order pipeline, what we have, we're discussing. I don't foresee, I'm not saying for the sake of saying it, I don't foresee order, which I mentioned earlier, order is an issue for at least next couple of years. I don't think that's any issue with respect to the next 2 to 3 years. So we'll have enough order book flowing in from C&I, plus also the our advantage is also that slowly we will move ahead with the EPC nobody offers with land, then plus our OMS, plus the ALMM. All this put together, I really feel pretty confident that order book will not be an issue.
Understood. The second question, so what are the aspirations for us, for AC Forge, for next 3 to 4 years?
See, it started, first of all, we wanted actually to put it on the growth trajectory on a consistent basis. So if you see the last 3 to 4 quarters, we are consistently seeing the growth. So, we can always have a debate about, this growth rate is sufficient more. But at least consistent growth rate. In fact, if you see the Q1, it has been one of the best quarters for SE Forge. Now with various, one is that we are now expanding into non-wind in a big way and then concentrating on exports as well. So therefore, I don't want to put a number to what it is going to be, but we see a significant uptick. I would prefer to talk about the next 2 years plan for SE Forge towards end of this year, after establishing this year numbers thoroughly. And also whatever is happening in terms of ALMM, in terms of BIS, all these are going to help the SE Forge. In fact, now with this restriction, even the bearings can't be imported. Not imported, they don't use the word of imported, but basically bearings have to be domestically sourced. So I think SE Forge will stand in a good position. But exactly what I see as a clear path is that it's good for us to talk first actually showing 1 year good numbers, and which we are confident of showing this year.
The last question on export potential. I think your slides mentioned the export potential. Do you think there is a significant near-term opportunity in the neighborhood or maybe in the Middle East? And any comment on export potential will be helpful.
Yeah. There is reasonably good export potential on the, as I said, in the neighborhood, in the Middle East, even including the Europe, where we can really compete. Right now, I'm not talking about US. That was one of the first countries we were targeting. But I don't think neither you nor me can comment upon whether I can export to US at this stage. But we're concentrating on the neighborhood, Middle East, and the Europe. We are now right now on the process of studying different countries, what models, what price ranges are there. And because most of these places, other than the Middle East, most of the places we have been present, and we're talking about our program and getting the right kind of model ready. So therefore, let's say can start some sort of an exports in a year from now, gradually. But we will start offering and taking the orders towards end of this year.
Understood, sir. Thank you. That's very helpful. Thank you.
Thank you. The next question comes from the line of Amit from Morgan Stanley. Please go ahead.
Hello, sir. Sorry, the line dropped while you were discussing the earlier question. The second question that I had was on your contribution margin. That's been pretty good at 26%. But do you see this settling at this rate, or will it go down back to 20 to 23%? And what has been the lever? What changed that drove this jump from 23 to 26% in this quarter?
Himanshu will explain, but my wish is it stays there. But my wish can't get anything.
No. We also wish that.
No. Amit, of course, I think, firstly, I think we maintain our guidance that it will be about 22 to 23%. This quarter has been high, because of for 2 or 3 reasons. There are certain high, average sales price orders that have got delivered in this quarter. And also there has been a lower project activity due to the early onset of monsoon. Plus, of course, we've been able to maintain our COGS. Now, the COGS maintaining would be an ongoing phenomena, but the other 2 factors are, very, very quarter-to-quarter dependent. So when you sort of look at overall matrix on an annual basis, I would say we maintain the guidance of 23%. So this is clearly an outlier performance for this quarter.
Okay. Another thing, just in continuing on this point, is your realization actually are declining to around 55 million per megawatt. Now, despite you saying that there were some high price orders in this quarter and ETC was also not there, but still the trend goes down. So are we seeing pricing pressure despite the competition being tepid at the moment?
It's not pricing pressure, it's low EPC activity and low EPC billing. I mean, with the higher EPC billing, the 55 million would actually go close to 57, 58 million. So we're maintaining. So there's no pricing pressure that we're seeing from customers or from competitors.
All right. Got it, sir. Those were my questions. Thanks. Thank you.
Thank you.
Thank you. The next question comes from the line of Nikhil from UTI Mutual Fund. Please go ahead.
Yeah. Thank you, sir. Just one question from my side. So, if you look at the last 5 quarters, we have supplied 2 gigawatt, and our actual commissioning is somewhere around 500 megawatts. So, just want to understand as to, how long will this go on, and will you start facing some kind of delivery pressures going ahead, and rather have some kind of an impact on our 60% volume guidance?
It is a very good question. This is what is bothering everyone. Obviously, yes, commissioning wise, when you look at it, that shows the difference. But there are a number of turbines out there commissioned. In fact, if beyond June, what we announced even in these 30-40 days, we commissioned another 55 megawatt and 166 megawatt we pre-commissioned. It means turbines are ready to get onto the grid, but the client is not ready with this 33 kVA evacuation system. There's another 400 megawatts have been erected. So therefore, things are at different stages of the erection this thing. And hopefully, now this year onwards, like you're saying, the sector also is picking up. If you look at Q1 last year was 700 odd megawatt, this year is 1600 megawatt. Slowly, the pickup is happening on the execution. So therefore, I think before we reach the stage what you're talking about, will it have an impact on turbine supply? I think we should be able to manage this. Yes, there is in fact, we would have supplied more than what we actually supplied in the Q1 if there was no that pressure of projects not being able to offtake. That's already there. So what I think is impact is a question. But to specifically answer your question on the guidance, no, we stand by that 60% with all these pressures. We know what projects we're doing it, what new projects we're opening up. We don't see that this is having any impact on the guidance for the year. Categorically.
Okay, sir. Sure. Thank you, sir. And all the very best.
Thank you.
Thank you. The next question comes from the line of Anuj Upadhyay from Investec. Please go ahead.
Hi, sir. Thanks for the opportunity. So my question relates to the ALWM, that is the localization push, which definitely would lead to a self-reliance. But don't you think so? It would lead to a short-term supply chain disruption because certain key elements like special bearing, gearboxes, yaw machine, turbine control, they all are imported from China. So won't this have any kind of an inflationary impact on the cost per se? Because if you see the industry anyway, India has close to 15-16 gigawatt of overall WTG capacity, manufacturing capacity, of which the utilization would be in the range of 1/3, close to around 6 gigawatt is what we are executing on an annual basis. So underutilization pressure plus this cost inflation, just want to get your sense on how would this add up to?
Partially, you answered yourself the question. The underutilization goes up, okay? Because let's say that some of the component suppliers today are at 25-26% utilization. Even in fact, if you look at our SC Forge, is about 26% is the capacity utilization. As the capacity utilization goes up, the cost actually comes down, doesn't go up because your fixed costs remain the same. Okay. And the second, I don't see any problem in terms of phase box, generators, and everything. We collected the full data. IW team has collected the full data and presented to MNRE. There is sufficient capacity available in India. And also with this upfront saying that for the projects which are going to get commissioned in the next 3 years, where the bids are submitted or exempted, plus next 18 months commissioning for other things. So there is enough stabilization period for us to meet that. So personally, I don't see any issue. In fact, even before the notification came, I have seen many of these foreign suppliers going around the country and trying to source their things and talking to various people, designing their products. So everybody on the job. I personally don't see any issue with respect to the supply constraint, as well as I don't see any constraint with respect to the cost. Because today our supply is mostly domestic, so still we are competitive in the market. Okay. So therefore, both point of view, and also with there being a timeline, I don't think there's an issue. In fact, if you ask me 2 to 3 years down the line, cost should actually start coming down because capacity utilization significantly will go up in India.
Okay, that's helpful, sir. And just to reiterate, you mentioned that WTG market for the current year would be around 6 gigawatt, right, sir?
Yeah, commissioning target.
Commissioning target. And got it, sir. And in terms of delivery, how much would that be?
Delivery generally nobody measures the delivery. We can only talk about our deliveries because we don't know who delivered how much is sitting on the ground because except us and one more, there is no listed company which announces what deliveries they made. That is not tracked by, at least publicly it's not tracked. Even the ministry tracks only the commissioning target.
Fair point, sir. That's helpful. Thank you.
Thank you. The next question comes from the line of Amit Mahawar from UBS. Please go ahead.
Hi, sir. Congratulations on continuous growth journey. I just have one question on the orders that we've won in last 2-3 quarters. Are these different on the terms in terms of advances that we have, the execution timeline, and particularly if you want to comment and connect this with the improving competitive edge Suzlon has, whether you call it ALMM, right, which will plug a lot of gaps or some consolidation in the sector. So just wanted to connect these two and wanted to know your thoughts, and particularly on the quality of orders and the terms also, the timelines of execution. Thank you.
The first thing is our aim is always not to increase the price, even if you're in a monopoly situation, because price goes up, tariff goes up, and market has got same number of times. Our aim always is to keep reducing the cost. Okay? Any new model comes when our COGS keeps coming down, and then we also keep offering some sort of a reduction to even customers. So therefore, I don't see that sort of a pressure. And also even the latest orders what we took, we have our margin expectations and we don't compromise on that. And everything is taken at that level only. And obviously, depending upon in some contracts, if there is a different risk pattern. Obviously, risk and cost would go together. It depends upon the commercial terms, payment terms. Your price might vary, but otherwise, base price would remain the same.
Okay, fair. So, sir, the same question. So, broadly, you're confident that in case there is any possible minor inflation cost, it is within the mechanics to see and manage that so that the LCO is optimized for the client.
I confirm that.
Sure, sir. Thank you and good luck.
Thank you. The next question comes from the line of Mahesh Patil from ICICI Securities. Please go ahead.
Yeah. Hi. First question is on the margin side. So, let's say given the increasing PSU orders and C&I orders in our book, can we expect improvement in margin, especially in the WTG segment? And second related question is, will the part of this improvement in margins would be offset by, let's say, increasing share of WTG in the overall revenue mix compared to, let's say, higher margin O&M business?
Himanshu will answer, but before that, if you are tracking us, you know that we were giving a guidance of saying that we will do mid-teens, then we revised it to early teens, late teens, then we said that early 20s, 2023. We have been revising and improving our margins anyway, our guidance as well, from time to time. Himanshu, for you to take it.
Yeah. So, Mahesh, I think as I mentioned earlier, we maintain that, at least the contribution margin, we will continue at 23% on a longer term basis. At least for this financial year. This quarter, the numbers may be a one-time outlier, led by the three factors that I outlined earlier. So we maintain the 23%. I think the margin guidance that we're giving is based on the order book mix that we have currently. Now, of course, going forward, if that order book mix changes significantly, then we may come back and correct on the margins. But right now, where we stand, we maintain that we will be at about 23%.
Okay. And so this 60% guidance that you have given, so if we consider this solely on the WTG installation, so considering the, let's say, inflation and other factors, can the top line growth be higher than 60%, or 60% is just for top line as well? That is the guidance.
No, we can't nitpick the guidance. We said 60% on all the key parameters, which is what we stand by.
Okay, sir. Thank you. Thank you.
Thank you. The next question comes from the line of Adish Mehta from Motilal Oswal AMC. Please go ahead.
Hello, sir. Just wanted to understand, versus Chinese competitors, what could be the pricing differential be? That's my first question. And second question is, with this requirement of domestic manufacturing of components, what does this do to SE Forge? You commented that it will do better. If you can just elaborate more on that. Thank you, sir.
Yeah. See, on the Chinese, really, I can't say what would be the difference because the different players are coming. Let's assume that we normally feel that there is a difference about 5 to 6% between us and them, the cheaper till now. That's the range what it is. But the thing is that there is a great differentiation factor between us and them. It's not just the price because of which people give it to us. One is reliability of the product, or how people look at it. And then second is that we are here, the Indian company, and we offer 23 years of O&M service, which is comprehensive. Anything happens during the O&M service period, any component fails, we replace things. So I think that proven track record of 30 years and we being here, our product being strong, and we also offer end-to-end, starting from the land to the service business, is what we get this order, especially from the C&I segment. If you see, that's the reason we are strong in C&I and public sector, these two areas. So 75% of order book coming from these two segments. That will continue. As far as your second question is concerned, with ALMM coming in, so let's see the fine print what is coming up, because we also make these castings for all the gearboxes, and we also make the bearing rings. Okay. So therefore, with the significant uptake coming in terms of everything to be probably domestically sourced, because it doesn't talk about domestic sourcing, but intention is to domestic sourcing. The demand for the components from SE Forge will increase, both in terms of bearing rings as well as castings. So both foundry unit as well as the forging unit, both will get benefited.
Thank you, sir. Thank you.
Thank you. The next question comes from the line of Anupam Goswami from SUD Life. Please go ahead.
Hi, good evening, sir. As per what I can estimate, your order inflow was close to about 540 crores. and that run rate is lower than any other quarter last year. Can you throw some light on this, and how do you expect the order inflow to build up going forward?
So, Anupam, as JP sir mentioned earlier, we don't see any slowdown in the order inflows. I mean, yes, whilst you're right that during Q1 it may have been a little less as compared to earlier quarters in terms of new order inflows, but that is not a barometer for the quarters going forward. I mean, there is a very active pipeline that our team is in advanced stages of negotiation. And as per our policy now, that any order which is over 100 megawatts, and once we have received confirmed advance from the customer, only at that stage is when we declare the order as a confirmed order. So, and you will hear about certain active orders that get translated fairly soon into confirmed orders.
Okay, sir. And also, in terms of slight PPAs getting delayed and cancelled also, are we seeing any slowdown in the next quarter or so? And when do you see the pickup may happen?
As I said that our order portfolio, 75% comes from the C&I and the PSU segment. So therefore, the only 25% come from the bid segment. And every single order what we take in the bid segment, which we mentioned earlier, is only after the PPA is signed. So we don't take any orders where the PPA is not. In fact, even the IPP would not be willing to give the order without the PPA signing. So whatever orders inflow is happening are all after the PPA signing. So therefore, there is no uncertainty once the order is booked.
Got it, sir. And grid order, that sort of bulk order will, are we ready for that? I mean, we are qualified to take that, right?
Which order?
Grid power utilities order.
Yeah. We again today the 21% of our order book is from PSUs, and NTPC itself we have more than 1.5 gigawatt of order right now. NTPC is one of our the single largest client.
Right. Thank you, sir. I'll join back.
Thank you. The next question comes from the line of Pratik Giri from Suzlon Research. Please go ahead.
Hello, am I audible?
Yeah.
Greetings, Mr. Chalthani. Great numbers. Congratulations. Mr. Chalthani, I have my first question on BESS. So I just wanted to get your sense, in case the BESS storage goes up to say 6 or 10 hours, or any long duration storage comes, will the role of wind still be relevant, or wind's relevance due to long storage may change, if it comes? That's the question number one, Mr. Chalthani, if you can help me understand.